Hey you guys, welcome to the channel. My name's Jeff. Today we're going to talk about super microcomputer, and I want to show you 5 things that interest and excite me about this company. Just at the start, this is not financial advice. The first thing, just at the beginning of this week, super micro was added to the S&P 500. I feel like this is a pivotal move for this particular company and stock, because before then it was just like a small cap, mid cap company that rarely anybody really knew about unless they were really into semiconductor and data center stocks. But now that it's included in the S&P 500 and all of these mutual funds and ETFs are need to buy it so that it can be part of their index, I think there's a lot more confidence in investors who are either looking at the stock or who already owned it, so that now they feel that this is a legitimate company, a legitimate stock. So that may be one reason that suddenly there's kind of an increase in buying. And then the next question I have is, is this a meme stock? Is this a hype stock? Is this something where everyone's getting excited and it's just going to crash and lose 50% or 80% of its value overnight? Because I think a lot of people out there think that there's a lot of gambling and speculation going on. And that is entirely possible. However, I just want to point to something that suggests kind of the other side of this. If we look here, this is an article from January 29th. And the thing I want to show you right here is the outlook. So the company reiterated its financial outlook. It actually raised it. Fiscal year 2024 revenue outlook was raised to 14.3 to 14.7 billion. And you might say, well, why is that such a big deal? I mean, billions are billions, right? Well, if we look at what some analysts were looking at and predicting, this is a value line survey right here. And if we look over here, you'll see what this particular analyst said. We have raised our fiscal 2024 revenue projection by 460 million to 10 billion. And this is an analyst back in December 22nd of 2023. So we're talking about 2 months ago, this analyst was saying, we think this company can make 10 billion. And now what we have here is the company saying, we think we're going to make 14.3 to 14.7 billion. So this is this is almost 40 to 50% increase in what the company's saying their revenues are looking like. So I think this is one thing in the pro column when it comes to looking at this stock to suggest that it's not all hype, which is the company is making a lot more money. Their revenues are a lot higher and their profits look like they're going to be higher in this fiscal year for 2024. And I don't think a lot of people knew that even a couple or 3 months ago. So, and then if you look at some of the other metrics, the net sales surged to 3.66 billion. And the prior quarter, they were 2.12. So that's almost a doubling of the net sales. And, if you look at the year over year, they went from 1.8 to 3.6. So that's exactly a 100% increase from that quarter last year to this quarter this year. The gross margin is reported at 15.4, which is, not a really high number. That's something I would say is in the con column for this particular company, because in software and in chips, we're often looking at margins somewhere between 30 or 40%, in the best cases, maybe 50%. So this is clearly more of a hardware kind of margin, and this is not in the same high margin category as some of the companies that are in the semiconductor industry. Another thing here I wanted to look at, we've looked here at the fact that it was added to the S&P, that's number 1. The soaring revenue is number 2. And the strong earnings growth. The company is, very kind of enthusiastic about their ability to change their revenue growth, to improve their revenue growth. And if we look right here, we're looking at the net income grew to 296 million, which was up from 157 million. So this is an increase of almost 2 times, right? From about 150 to 300. So they're growing not only their revenues, but they're growing their profits. The share price, this is the part kind of in the cons column, and this is number 4. This share price has tripled since the beginning of the year. And I think that's something that just any kind of rational person has to look at this and go, okay, it looks like their earnings are growing. It looks like their revenues are growing, but now their share price has tripled. I almost kind of would expect that the share price should grow roughly in step with the earnings and the revenues. But now it looks like the share price has gone and tripled, which is like a great leap way ahead of the earnings and the revenue. So that's just something that I'm kind of cautious of and cognizant of, and I wanted to share with you guys. And one other thing that I look at that I think is just useful for any investor looking at any company, it doesn't matter if it's a semiconductor or a data center stock, is I take a look at the assets and the liabilities for the company. And generally what I look for is assets to be growing and liabilities to either be shrinking or to be, holding steady. And if we look here at this company at SMCI, we can see here that going over here to the current position here, and we can see the current assets right here and the current liabilities. So looking here at the assets, I'm just going to enlarge this a little bit so it's easier to see. The assets back in 2022 were $2,806 million, so 2.8 billion. And then at the end of the fiscal year 2023, they were 3.179 billion. And as you can see, they've grown. And now, as of September 30, 2023, they were 3.570 billion. So what we can see is the current assets have been growing. And then when we look down here to the liabilities, we see we were at 1.4, and then they went to 1.7 and went to 1.9. I'm not super concerned about that because as you increase your sales, a lot of times you have to make purchases and you owe a lot of your suppliers who provide you with parts and machinery, you have to pay them. So it looks like the liabilities are increasing, but the assets are increasing as well. And just as a double checking of this information, if we look here, you can see September 30, 23, and they have a different reporting schedule. They report in, let's take a look here. It'll just say it here. They report their fiscal year is July through June. So as of this reporting period, their assets were at 3.570. And if we look here at the Wall Street Journal's info on the company and we scroll down and look at their assets, we're at 3.570 as of September 30. And if we go over here to the Wall Street Journal and we look at the assets, total assets right here, it's 3.684. So 3.684, it's really close here. So you can see that the number for the assets is right here, and this is as of 2023. And then when we scroll down here to the total liabilities, we've got them right here. It says 1.712, and this compares with 1.9. So I would venture that this may have been these are the September 30th, 2023 numbers, and these numbers are at the close of the year, maybe as of December. Anyways, you may want to check yourself before as you do your own due diligence on this. But anyways, what I can see, my take home here is that the assets, if we look at total assets for the company right over here, as you can see, the assets have been increasing from 1.9 to 2.2, 3.2, 3.6. So the assets are moving, I believe, in a good direction. And as far as the liabilities, when we look at the total liabilities, they were smaller back in, say, 2021, 2022, they're growing, 2023, they're growing. But you can see the liabilities are not greatly increasing. This seems relatively stable. And so these are just a few of the things that I look at whenever I assess a company. And just taking a step back here, I think that this stock has gotten out a little bit ahead of its skis. I think there is a lot of excitement and emotion going on, not only with SMCI, but also with anything related to AI and chip stocks. This company is related to NVIDIA in that they make modular systems for data centers to put those NVIDIA GPUs and the CPUs and the different products that they make into their racks. So I think that this is piggybacking on NVIDIA and on AI hype. And as such, I think it might be more expensive than it would be if we weren't at a time when the market's been going up and up and up. My overall view of this, and again, this is only my opinion and it's not financial advice, is that this stock could be selling for $750 a share, and that would be totally reasonable for a company with these kind of earnings and these kind of revenues. And I could even see it selling for less than that, and it wouldn't surprise me. However, the market reality is often different from the underlying intrinsic value of a company, what it's really worth. And, over time, price can go up and down, and the value of the company is sometimes lower than the highest highs, and sometimes it's higher than the lowest lows of the stock price. And I think this company is just a very volatile one at the time because it is so intrinsically involved with all of this hype surrounding AI. So those are my thoughts on the company. I'd really like to know what you guys think. I've already made a couple videos on SMCI, and I see that some of you guys are really fans of this company and bought it at 200, at 300, and everywhere between then and now. And some people are standing on the sidelines saying this is a junky hype stock, it's a meme stock, and people are gambling. So I think time will tell us the reality regarding this stock. And what happens from day to day is admittedly just short-term fluctuations in the market, and it doesn't really teach us anything. And that's one thing I think we can learn from Warren Buffett and Benjamin Graham before him, which is in the short term, the market is a voting machine, and in the long term, it's a weighing machine. And another way to look at that is what we have right now is like a popularity contest where people are getting excited and they're voting with their money, betting on the price movement of stocks. But in the long term, the market tends to weigh things. It says, what's this company really worth? Here's the revenue they take in. Here's what they get to keep. Here are their profits. And are these profits worth this price tag? And I think something that we all need to keep in mind is no company is worth an infinite price. And when we see a company have its share price go up 3 times, 300% in just a couple of months, you have to step back and say, is this rational weighing of the value of this company, or is this excitement? Is this gambling? Is this speculation? So I want to know what you guys think. Put it in the comment section below. If you're new to the channel and you want to see more analysis of SMCI and other stocks as well as ETFs, subscribe to the channel, hit the little notification bell, and you will get a heads up whenever I make a new video. Thanks so much for watching, and I will see you in the next video.